My name is Marcelo Cajias. I'm from research at PATRIZIA. We are a listed company in Germany. We are a ESTA company. We have around about 15 billion assets under management. We are covering Nordics. We're covering also Germany and focusing on several investment opportunities all around Europe. And today I would like to talk about the development in the Nordics market. From a macroeconomic point of view, I think we are now currently in a very particular situation in the European Union, in the Eurozone, because we have a very tight monetary policy going on. So the European Central Bank is dictating the rules. And in Sweden and Norway, we are looking that the central banks are following all the rules that are implemented by Mario Draghi in terms of interest rates. We see, on the one hand, we see that the ECB is pushing investments, is pushing the quantitative easing program in order to push the economy and also the growth development in the Nordics. We see that that Denmark and Finland are back on track. We say are back on track because they are expected to grow in the coming years by more than 1.5%. And on the other hand, it is quite peculiar to see that the development is mainly focused or based in consumption. We see that the consumption levels all around Europe are increasing in order to push inflation back to a target rate of around about 2%. So we are now based on the consumption level to counteract the negative developments of inflation. And if we look at the Nordics, we see on the one hand a problem or one issue, that is the halving of the oil price. In the medium term, this development would be negative for the economy, for the Norwegian economy. But on the other hand, this development is counteracted by the fall of the NOK as a currency, since foreign products are becoming cheaper. Are becoming more and more attractive. And on the long term, we see that Norway is on a good track despite the halving of the oil price. In terms of real estate investments, I think the Nordics are a very particular region. We're talking about 4 different countries, 4 different regions, 4 different currencies, and also 4 different languages. So what are the main drivers for the Nordics, in our opinion? That are demographics. We can look at the macroeconomic and microeconomic development, but if we look at real estate investments, we see that that real estate investments are long-term investments. So we are focusing as a property company to invest on the long term in order to get stable returns, stable income returns, and also to provide suitable products for our investors. And it is quite different to look at the Nordics from a macroeconomic point of view because of the market distribution, the distribution of the markets, because of the market size, and because of the players. We will talk later about what players do, how players act within the markets, but it is quite different to see how they act. They are, on the one hand, local in the sense that they do their own business, but on the other side, I think we will look later that the share of foreign investments or foreign investors willing to diversify into the Nordics is increasingly, partly perhaps because of the expansionary monetary policy. And if we look also at what is happening in the Nordics, we see a lot of urbanization topics. I went through the EXPO Real up to now, and I saw that the effect of urbanization and population demographics is becoming more and more important, not only for investments, but also for policymakers. And if we look at the share of population in the main cities in the Nordics, we see that almost 25% of the demand, that is the population, is concentrated in 4 cities. If we put it in comparison to other regions, such as Germany or France, we can see that the importance of investments is located mainly in the big cities such as Copenhagen, Bergen and Vanga and Tesbo and so on. So if we look at products, perhaps later, if you look at products, the main question is, I think, not to look at what can you invest or what can you find in the Nordics, but to see how are these markets moving in the long term. And regarding the expectations, it is, in my opinion, a quite interesting research field to look how the Nordics are working. since the penetration and the internalization are leading in the long term to a concentration of market activities. If you look at for example, if you look at the development in the housing market during the past years, we see that the construction activities are positively correlated with the population development. And this is, on the one hand, a challenging situation, but it is at the same time a very interesting market development. Interesting because it is easy explainable with urban models, but it is quite challenging because this requires for us as investors to look at the markets and to get the local knowledge to invest in the market. So we are, as an investment company, looking forward to acquire and to acquire, make investments with local persons that understand the markets and to understand the fundamental drivers in the Nordics. It is, in my opinion, we try to go behind the numbers and to see if we're talking about investments in the Nordics, we're talking about long-term investment, regardless of the investment strategy. It's just buy, hold, or buy and sell. So if we look further, what is going to happen in future in the Nordics, we can observe that the correlation or that the market activities in the Nordics are concentrating today in the regions with the highest potentials. That means that the demographics is playing a huge role when it comes to products, when it comes to developments, when it comes to repositioning of existing objects, and so on. So it is quite interesting to see that some regions in the Nordics are falling in terms of population, but at the same time on stock. So we have to look, on the one hand, we have to identify the regions that are on the long term attractive for us as investors, but at the same time we have to look how can we create the products that our investors need and how are these products distributed. It is quite important, in my opinion, to emphasize that demographics or urbanization has benefits and is quite dangerous on the long term. So if we look at the strategies of lawmakers or policymakers, we look at the main cities and we see that the cities that are growing or will grow up in the next 10 years need or require an adequate infrastructure in terms of hospitality, roads, education, and so on. So it is for us as investors important to look at the markets, but also to try to avoid such an agglomeration problems in the long term. And what is happening now? Well, the last year I came up with the same slide, and I finished up my presentation saying that the 2014 would be a historic year in the Nordic market. I think I have to repeat my sentence as last year because the investment volumes in this year are increasingly. We see that the penetration of international players and also overseas players is increasing the share. And we see, for example, that during the first 2 quarters of this year, the transaction volume in commercial properties increased by 30% in comparison to the last year, just up to or in the first 2 quarters. So we see increasing appetite from international investors, regardless that the Nordic markets remain very local players, remain local in nature, and are quite different within the countries. But at the end, it is important, I think, for us to understand that many investors are entering the market, that competitiveness will play or is playing an important role. And at the end, I think many investors are willing to diversify into real estate and to reallocate their portfolios, increasing the share of real estate, the exposure on real estate, given that stocks or fixed income or government bonds are not attractive. And that brings me to the next assumption, that we are moving today or currently in a market with an illiquidity premium. That means if we look at the income return of properties in comparison to government bonds, fixed incomes, stocks, we are now many investors are trying to allocate their money into property because they get a low but a stable return in comparison to to traditional investment assets. So it is an illiquidity premium in terms of income return, but at the end, I think the outlook for the Nordic markets is quite positive in the long term. And it is quite interesting also to see that the pressure on markets currently are driving now the yields and down and the rents up. So we see a compression of prime yields continuously since 6 years in case of the four main cities, of the four capital cities, of something about 150 basis points. What means that it is many investors are entering the market, and we're going now to a product availability problem, since we are not really getting the right properties to invest, and many investors are, I would say, fighting or competing for the same assets. So it is not a return increase. It is, I think, a risk reduction. I don't know. Perhaps we could discuss what kind of risk and return situation we have at the moment. And at the end, I would like to say there is a high competitivity within the markets, and we see increased internationalization of the markets in terms of market players. And perhaps we can discuss all these topics by the direct market players. So thank you very much for this introduction.